Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing Stock Market for Beginners, rules to live by. I got 8 things here today, guys, that you absolutely have to remember as a stock market beginner. This is my opinion on things that when I keep these 8 things in mind that I'm going to share with you guys today, I make money 100% of the time over the long term. 100% of the time. Now, short term, sometimes these 8 don't work out because sometimes, a stock will just go down or whatnot. But over the long term, I always sell for a gain as long as I stick to these 8 things. When I try to go away from these 8 things that I'm going to share with you, that's when my problems arise, guys. That's when my issues arise. So I'm going to share this with you today. This is a video that should be helpful for anyone that's a stock market beginner and needs to know a strategy, or even advanced investors. If you're trying to be a day trader or a short-term trader or something like that, this video is not going to be much help for you. This is called long-term stock market investing, which is really my modern long-term investing philosophy is like thinking about a company 1 to 5 years out. So I'm going to share these 8 with you today. Hope you enjoy. Hit that thumbs up button if you do. Let's get into this. Number 1 is what? Focus long term. This is number 1. If I'm thinking about a stock, like what's going to happen with a company, what's going on with that company over the next 3 months, 6 months, I've already lost at that point. I need to be thinking like a minimum of 1 year down the road, but really like what's going on with that company 2, 3, 4 years out. And that's kind of the horizon I like to look at, because that is where I can realistically see from listening to conference calls, from reading annual reports, from listening to management's interviews, all that kind of stuff. Like that's when I can get a vision for the company, focusing on what's going on for the next 1 to 5 years. Anything past that, I don't know, because the competitive landscape can change. Too much can happen 5 years from now, 6 years from now, 10 years from now to really get a judgment on a company. But 2 years from now, I can definitely see the vision. And if I can't see the vision for the next 2, 3, 4 years, then it's not a company I want to invest in, because I need to be able to see the vision, see where the company's going. Why is that company going to succeed over the next few years? And then I can jump in that stock. But if I can't realistically see how's that company going to be succeeding 3 years from now, I will not invest in it. Because if I do, then I'm just going against my number 1 point there, and it never works out for me in the end there, guys. So number 1 thing, focus long term, a minimum of 1 year out, but really 2, 3, 4 years out. You can't see the vision, don't mess with that stock. Number 2 is a strong balance sheet. Now, what do I define as a strong balance sheet? What I like is I like cash heavy and investment heavy. So meaning that when you look at a balance sheet, there's a bunch of different line items. I like to look at cash and cash equivalents. I like to look at short-term investments. I like to look at long-term investments. I like to add up those items, and then I like to subtract them from short-term debt and the long-term debt. And basically, I'm trying to get a very positive number for the cash and investments versus the debts. Now, this isn't good for all industries, right? Because like, for instance, one of my positions is a company called Wynn Resorts. They have huge resorts here in Vegas and Macau. The resorts cost billions upon billions of dollars. Usually they have more debt than they have cash and investments. So if it's a company like that, I'll give it a pass. But most companies, the majority of them, 80+% of industries out there, the company should have way more in cash, way more investments than they do debt. Like I like usually at least like a 3 or 4 to 1 ratio. And the higher that ratio is, the better it is. So that constitutes a strong balance sheet, and that will let you sleep well at night. Because guess what? If a recession happens, if the company's products or services struggle, if something happens, they can get through that because they have a strong balance sheet, and they can still pay employees, they can still do all those things, they can still expand the business even when a tough economy comes, which it will eventually, right? We always go through, we're most of the time we're kind of here, right? And sometimes we're here, but sometimes we're also down here, right? So you got to have a company with a strong balance sheet, or they won't get through it. They'll go bankrupt, and then you're going to lose all your money. And then, guys, number three, a company has to be profitable for me to invest in it, or it has to be profitable very soon, like within the next 12 months, seeing profitability. The reason being is then you can get a PE ratio on that company, and then you can tell better if it's an overvalued company or undervalued company. I don't like to mess with companies too much. I mean, it's very rare I like to mess with companies that are unprofitable, or companies that, we're going to be profitable, but it's going to take 3 or 4 years from now, because who knows what could happen 3 or 4 years from now? What if that company fails? What if the competitive landscape becomes a lot more competitive over the next few years? Who's to say that company's ever going to get profitable? So I like it if a management's promising me, and if I can really realistically see that company will be profitable within the next 12 months, if they're not already, then I can invest in it. But if they're like, there's a lot of stocks out there, right? That like a Tesla, for instance. I love Tesla. I think so much of Tesla. I won't mess with Tesla because they're promising, or they aren't even promising profitability, right? They might be profitable 4 years from now. It might be 5 years from now. They might never be profitable. We just don't know. But it's no time soon. We know that for sure. So in order for me to really invest in a company, I got to see the profitability coming pretty soon, very soon, or already profitable. I usually only invest in profitable companies that are already making money, that already have a positive net income. So stick with that, guys. Number four, an executive management team that is focused on offense. They say the best defense is offense if you listen to a lot of sports, right? I 100% believe in that. You gotta have an executive management team, meaning the CEO, the CFO, all those guys that are focused around how they're gonna expand products, how they're gonna expand services, how they're gonna expand the business, how they're gonna take market share from this guy and that guy, this company and that company. That is the type of executive management team I like. I like to look for that. And if you can find an executive management team that's very focused on offense and execution, that's a good management team. What I don't like is when I listen to conference calls, which are all publicly available, by the way, on an investor relations page of any public companies. I don't like it when a company is focused too much around defense. And it's like, okay, where are they trying to expand? Are they trying to expand in new markets? Are they trying to come out with new products and services? Like, what are they doing? And if it just sounds like they're playing defense, not for me, not for me. I love offensive playing companies, guys, and that is the way to stick, because then the growth can come. And even if somebody comes and steals some market share for them from whatever reason, they got something else they're already brewing in the back there that they're coming in. So that is big time, guys. An executive team that is on offense. Number five, go with what you believe. This is a huge rule to live by when you're investing. Go with what you believe. What you believe. The worst is when you let other people influence your decision making. It doesn't matter what I think about a particular stock. It doesn't matter what Warren Buffett thinks about a particular stock. When you are investing in a particular stock, don't pay attention to what this guy or that guy or the guy on TV says about that particular stock. Like, that means nothing. Warren Buffett is like my investing god. That's the one I look up to the most, right? I don't care at all what Warren Buffett thinks about any of my stocks. If I met him in person, I would ask him a lot of questions. I would not ask him about, hey Warren Buffett, what do you think about GoPro? What do you think about Wynn Resorts? What do you think about Google? What do you think about Starbucks, my investments? I don't care what he thinks. I really don't, because I don't want him to influence my decision making at all in that case, guys. So go with what you believe. What you believe is what you need to invest in the end. Don't let someone else's decision making, even if you think that person's so smart and they know so much, don't let them impact what you believe in the end, guys. There's some analyst out there that has never invested in a real stock in their life, but yet they have an opinion on it. Like, don't listen to other people. Listen to what yourself. Go with what you believe. That's so key in stock market investing, guys, to drown out all that noise about stocks, because you're going to have a lot of noise out there, short sellers and this and that. A lot of people are going to be rooting against your stock sometimes. Just got to filter it all out. Number six, we've got 3 left here. Realize that gains or losses are only made or lost when you actually sell a stock. So don't get too happy if you own a share and let's say it's up 50%. That's phenomenal, right? I'm investing in the stock, only been at 2 years. It's up 50%. I'm killing it. Don't get too excited about that, because guess what? You haven't sold yet. So you don't make the gain until you sell. You can still lose that money. Same thing if you go down in a position, which 50% of the time when you go into a position, it's probably going to fall, right? I mean, what are the chances you invest right at the bottom and then it goes up from there? It's a 50% chance. Maybe a little better if we're in a bull market, maybe a little worse if we're in a bear market, right? But most of the time it's a 50-50 chance. So you're going to probably be down in a position 50% of the time, roughly. So you need to just kind of filter out all that. Oh man, I'm down in a position, I need to sell, or I feel bad about that. No, the gains or the losses don't come until you actually sell your position out, guys. That's when the final judgment goes, and that's when you shouldn't even get emotional about it, but that's when you can feel a certain way of, yes, I made 50%, or damn it, I lost 50% of my money, or whatever, guys. So remember, it's not made or lost till you sell. Number seven, hedge big positions. This is the one I'm the worst at on the list. If you go into just a few stocks, which I'm actually okay if you do that, but especially if you know what you're doing, hedge your positions, guys. Hedge your positions, especially if you got an account that's, $50,000, $100,000, $200,000. You got a bigger type account. If you're into just 2 or 3 stocks, make sure you hedge those positions. How do you do that? Well, let's say you got a lot of money in, let's say you got 3 stocks, right? You got $10,000 a piece in those, right? So you got $30,000 just in those 3 stocks. You might want to think about adding $1,000 each of short-term put options, like dated out like 6 months from now, maybe even 12 months from now, just in case those stocks drop big time. You're gonna make some money still, guys. You're gonna make some money because you'll own some short-term puts, which is basically betting that the company's shares will fall over the next, let's say, 6 to 12 months or something. You can do it for whatever date. I just would prefer 6 to 12 months out. And then if that stock falls, you make a bunch of money off that, and then you can sell those puts off, and then guess what you can do? You can buy more shares at a cheaper price. So it's a beautiful way of covering yourself. If you're a little confused about options and those kinds of things, watch some of my videos on stock market options. I think I even have a playlist about stock options on the channel, so check out that, guys, and that will help you. I'm talking specifically about short-term put options. When I say short-term, I mean like 6 months out, maybe even 12 months out, put options that you can cover yourself if that stock does go down. But mainly if you're really heavy into 2 or 3 companies, that's when you want to do it, guys. The last one, number 8, this is probably the most important of all of them, arguably, other than maybe number 1, is research everything you possibly can about every single stock you invest in. Research everything. You need to know that business inside and out. Inside and out. You need to know everything about the business, guys. You cannot just kind of know about it and then be confused about, oh wait, how do they make their money there? And how do they do this? And how are they going to be profitable? And how many employees do they have? You need to know everything. You need to be like the CEO of that company. You need to know everything about that company. You don't know about the competitors of that company. You need to know all about where that company's vision is, where it's going over the next 3, 4, 5 years. You need to understand, are they trying to cut margins down to, fend off a competitive threat? All that stuff, guys. You need to know all that. You need to know the competitive landscape, know the company inside and out. Read the 10K. It's on the investor relations page of every public company. Read the 10K annual report. Read the 10Q. Listen to conference calls. Do all that stuff, and it will help you. If you try to research on YouTube, if there's an interview with that CEO, let's say you want to invest in, Facebook stock, look up Mark Zuckerberg interview or something like that, and just see what he's talking about with Facebook and those kinds of things. You need to know that company inside and out, guys. So research everything. That will give you the confidence that if that company does go down and you think it's still a great deal and you believe in it, then you can buy more stock, rather than if you know just a little bit about that company and the stock goes down, then you panic and you sell just because you're like, shit, I don't really know anything about this company. I just need to sell, guys. So research everything, know that company inside and out, and you will prosper over long term. Do these 8 things, guys, and I can almost guarantee you, I guess I can never guarantee you, but the chances you're going to make a lot of money over the long term, you focus on these 8, very, very high. You go away from these, and it's going to be tough for you. I'm just going to be honest. It's going to be completely tough for you unless you have some other strategy that you found and you just think that's the golden rule. But this is what works for me. This is what has worked for me. When I go away from these 8, that's when I've had some tough investments or some tough times, guys. So stick with that. Hope you guys enjoy this today, a little stock market for beginners. Check out my book, which is a phenomenal book if you're a stock market for beginner. This goes through much more into depth about all my investing strategies and what I look for. And, it's also good for advanced investors. I know a lot of people have enjoyed it, that have bought it on my channel that aren't even beginners in the stock market, as well as stock market for beginners. So that's linked in the description. If you just came across this channel, you may want to subscribe. We talk personal finance on the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk stock market investing more than anything. Thank you for watching, guys, and have a great day.